Hello viewers, welcome to my channel. I am Hashim Ali Khan here. Presently I am giving the lectures on the subject financial accounting. In this subject, the new topic I have selected now today is subsidiary books. Already I have uploaded the videos on rectification of errors, bank reconciliation statement, depreciation, final accounts of sole trading concern. These are the topics I have covered in this subject of financial accounting. So hope my regular viewers have already watched those videos, got the command on those topics. Now in this video I am going to explain you the theory regarding subsidiary books. What are the subsidiary books? What is the importance of subsidiary books? All these things I am going to explain in this video. Then after this we'll start the problems on subsidiary books. So if you are new to my channel, I suggest you to visit the playlist of my channel. I have uploaded a number of videos on different subjects: advanced accounting, cost accounting, corporate accounting, business statistics, financial management, investment. So many subjects I have uploaded. Select your subject, select the topic, watch the video, increase your knowledge on the subject. Now I am going to start the new topic called subsidiary books. See, when a business is small, all the transactions can be recorded in a single journal. The book of prime entry is journal. Whenever a transaction takes place, it will be recorded in a book called journal. Later on, it will be posted from journal to ledger. This is the process of accounting. So when the business is small, only few transactions are there, so they can maintain only one journal. All transactions can be recorded in one journal itself. Periodically the transactions can be posted into the ledger accounts. That is the process. But when the business expands, the number of transactions will increase. When number of transactions will increase, the size of the journal will also increase. It will become very bulky. It will be difficult to maintain, to record all transactions in a single journal. So there is a need to subdivide the journal into specialized journal, into parts. So subsidiary books, the need of subsidiary books arises when the number of transactions are more. So we divide the journal into different parts. Each part of the journal will be called a subsidiary book. And a subsidiary book is a book of prime entry, original entry, because as soon as the transaction takes place, it will be recorded first in the journal, in the subsidiary book. So the main journal will be divided into number of sub-journals. These sub-journals are called subsidiary book. It's a specialized type of journal because in this specialized type of journal, only one category of transaction will be recorded. All same transaction will be recorded in one journal. So that is the meaning of the term subsidiary books. Now, advantages of subsidiary books. Why we divide the journal into sub-journals, subsidiary books? A number of advantages will accrue. What are the advantages? First advantage is recording work easy and quick. When we record all transactions in one journal, it will be difficult in posting the transactions, in maintaining the transactions all in one journal. It will be very, very difficult. So if we make subsidiary books, sub-journals, each sub-journal is concerned only with one category of transactions. So it will become very easy, very quickly we can be able to record. Secondly, division of labor. Division of labor means we can appoint a separate person for each category of transactions. For example, a person, Mr. X, will be appointed for recording all sale transactions. So he will be given a sales journal, that is subsidiary book, sales book. So he is concerned only with recording sales. Another person, Mr. Y, he is assigned with the task of recording purchases. He will record only purchase. Mr. Z, one more person is there. He is appointed to record all cash transactions. So in this way, there is possibility of division of work when we keep the subsidiary book system. Secondly, easy reference to a particular aspect. We can easily get the total of a particular transaction. For example, we want the total of per week, sales per week, purchases per week. Like this, we want the total of each aspect of the business. So when we keep subsidiary books, easily we can find out the total in a particular period. Next is reduction of clerical work. When all the transactions will be maintained by one person, it will be very, very difficult. Clerical work will increase. Here, the clerical work is subdivided between different persons, so it will be very easy. These are the many advantages of maintaining subsidiary books. Now, types of subsidiary books. See, normally we have 8 types of subsidiary books. The 8 types are cash book, purchases book, purchase return book, sales return book, bills receivable book, bills payable book, and lastly journal proper. These are the 8 types of subsidiary books. Now each type we'll discuss one by one. First subsidiary book is cash book. Cash book is a subsidiary book. It's a prime book where all cash receipts and cash payments will be recorded. So a cash book is simply a cash account, because the format of the cash book is exactly of an account, debit side and credit side. We record all receipts of cash on debit side and payments of cash on credit side. So that is the first book called cash book. Many advantages are there of keeping a separate cash book, because when we keep a separate cash book, there is no need to maintain a cash account. Cash book itself will act as a journal as well as ledger. It is acting as a journal because whenever cash transaction are taking place, it is recorded in cash book. It's a journal. Later on, it is a ledger also, because we are not opening a separate cash account. So this cash book will act both as a journal as well as ledger. This is the first subsidiary book called cash book. Secondly, purchases book. Purchase book is a subsidiary book which records all credit purchase of goods. Actually, 2 types of purchases are there: cash purchase and credit purchase. Cash purchases will be recorded in the cash book, whereas credit purchases will be recorded in purchase book. And one more point you have to remember: in purchase book we record only purchase of goods, not purchase of any other item like assets or consumables, anything. So only purchase of goods on credit. These 2 words you have to remember. That means whenever we purchase the goods on credit, then only we'll record in purchase book. Purchase returns book. All purchase returns to the suppliers will be recorded in purchase return book. Similarly, sales book. Sales book will record all credit sale of goods. Cash sales will not be recorded in sales book. Cash sales will be recorded in cash book. Only credit sale of goods will be recorded in sales book. And one more thing, sale of fixed assets or sale of any other item will not be recorded in sales book. Only sale of goods. This is the sales book. Sales return book. All the sales return made by the customers. Earlier we have sold the goods to the customer. Now customer has returned back the goods. So sales return will be recorded in sales return book. Similarly, bills receivable book. All the bills receivable received from the customers will be recorded in bills receivable book. उसी तरह bills payable book. All the bills accepted which are drawn by the supplier, which are drawn by the creditor. So all bills accepted will be recorded in bills payable book. And lastly, residual journal is the journal proper. Residual subsidiary book is the journal proper. So journal proper is called residual subsidiary book because if any transaction does not fit in any other journals, it will be recorded in journal proper. So it's a residual book. So in this journal proper, normally we record opening entry, closing entry, rectification entry, and adjustment entry. All these miscellaneous entries will be recorded in journal proper. And the format of journal proper is exactly same as normal journal. Now, cash book. Cash book is the first subsidiary book which records all cash receipts and cash payment. It is very, very important because by maintaining cash book, we can be able to record all receipts at one side and payments on the other side. So always we can be able to know what is the closing balance of cash. how much is the opening balance, how much is the closing balance. Easily we can be able to maintain the cash. We can keep a control on cash by keeping this separate cash book. Now types of cash book, we have three types broadly: simple cash book, double column, two column cash book, three column cash book. Simple cash book is a normal account, normal cash account, in which only cash column will be taken on debit side for receipts of cash and credit side for payment of cash. So only one column for receipt of cash, one column for payment of cash. Debit side one column, credit side one column. This is called simple cash book. It's simply an account. Then two column cash book. In two column cash book, we open two columns on debit side and two columns on credit side. What are the two columns? Cash column and discount column. So cash column and discount column on debit side, with cash column and discount column on credit side. Debit side, the discount column will be discount allowed. Discount allowed to customers. Similarly, credit side, the discount column is discount received from the creditors, from the suppliers. This is two column cash book. Now three column cash book. Now on each side, debit side three columns, credit side three columns. The three columns are discount, cash, bank. Similarly, credit side also discount, cash, bank. Debit side discount column is discount allowed. Then debit side cash column for receipts of cash. Then debit side bank column, amount deposited in bank. That means whenever we deposit an amount in the bank, we record it on debit side of the cash book. Triple column cash book, three column cash book. Similarly, credit side, discount column is for discount received from the suppliers, creditors. Second, cash column. The cash column on credit side shows the cash payments, and the credit side bank column shows the payments made from bank. The payments made from bank will be recorded in the credit side of the bank column. In this way, a triple column cash book, three column cash book will show three columns debit side, three columns credit side. Then cash discount and trade discount. A student must know the difference between the cash discount and trade discount. See here, both are the discount. Discounts are nothing but the allowances given by the receiver of cash to the payer of cash. So what is the difference between cash discount and trade discount? First, I will discuss about cash discount. Cash discount is the discount allowed by a business to the customer for making the payment before the due date. Before the due date. Example, I am having a business, you are my customer. I have given you a 3-month credit period. I have supplied you the goods, I sold you the goods. I have given a period of 3 months to make the payment. But you want to make the payment immediately after 1 month. And you are asking me to give some discount. So I will say, okay, I will give you the discount because you are paying before the due date. Before the due date. Or in other words, I will tell to my customers that I am giving you 3-month credit period. But if you make the payment in 1 month, I will give you 10% discount. If you pay the amount after 1 month, before 2 months, I will give you 5% discount. So I am making the customer to make the prompt payment so that I will give you discount. So this discount which is given to the customer for making them to pay the amount earlier, prompt payment, encourage the customer to make prompt payment. This type of discount is called cash discount. So normally cash discount will be given by a business to the customers. Similarly, trade discount. Trade discount is the discount in the reduction of catalog price given by the wholesaler, given by the manufacturer to the wholesaler or wholesaler to the retailer in the reduction of catalog price, so that the person who is purchasing the goods can sell the goods at catalog price. Simple example, I am the wholesaler of goods. I am selling the goods to the retailer. Suppose you are the retailer. The catalog price of the goods are 100 rupees. But I am supplying you at 70 rupees. 30 rupees discount. 30% discount. So actually catalog price is 100. But I am supplying you at 70 rupees. so that you can be able to sell the goods to your customers at catalog price. The remaining 30% whatever you are getting the discount, from that discount you can meet the expenses and you can get the profit. So trade discount will not be recorded in the books. When a person purchases goods and getting the trade discount, he will not debit trade discount account. He will not record the trade discount. The entry will be passed after deducting the trade discount. That means you got the goods at 70 rupees. So you recorded 70 rupees. You won't record 100 rupees and we got the discount 30 rupees. No, you will record at 70 rupees only. So trade discount will not be recorded, whereas cash discount will be recorded in the books. That is the difference between cash discount and trade discount. Now petty cash book. See here, in most of the businesses we find a number of small payments along with large payments. A huge payments are there and also some petty. Petty means small. Small payments are also there, like payment for stationery, payment for papers, payment for postage, telegram, carriage. The small payments are also there. So if we record all small petty payments and large payments in one cash book itself, the cash book will become very clumsy, very bulky. So it will be more appropriate if we separate the small payments into another book. So normally when a business is having more number of small payments, the business will appoint one petty cashier. Head cashier is there, petty cashier is there. The head cashier deals with main payments, large amount payments, whereas petty cashier will be entrusted with payment of small amount. Small petty payments will be made by petty cashier. So two cashiers are there, head cashier, petty cashier. So that is called petty cash book. Then impressed system. Normally the petty cash book is maintained on impressed system. What is this impressed system? According to the experience of the business, the management decides that monthly we require some 500 rupees. 500 rupees for making petty small payments. So this 500 rupees will be handed over by the head cashier to the petty cashier. From the past experience, we have estimated that normally we require 500 rupees. So at the beginning of the month, on 1st January, suppose the head cashier has paid 500 rupees to the petty cashier. From that 500 rupees, every day petty expenses are paid by the petty cashier. Suppose during the whole month, he has spent 450 rupees. 450 rupees he has already spent. 50 rupees he is still having. Now at the end of the month or beginning of the next month, the head cashier will repay the amount which is already paid. That means reimburses the amount which is paid. January month. In the month of January, the petty cashier has paid 450 rupees. At the end of January, he is having 50 rupees cash in hand. Then 1st February, the head cashier will pay him 450. Whatever amount he has spent, that amount will be paid by head cashier to the petty cashier. Now on 1st February, again he is having 500 rupees on hand. He is having 500 rupees on hand on 1st February. Again, throughout the month of February, the petty cashier will make the payments. Suppose February month he has spent 300 rupees. Only 200 rupees still is having the cash balance. Now what will happen? Now the head cashier will reimburse us 300 rupees. Will reimburse us 300 rupees to the petty cashier. This system is called impressed system. Next is debit note or purchase return. Debit note. It's a document which is prepared in case of purchase returns. Purchase returns. For example, we have purchased from X. So entry will be purchases account data to X account. This the entry will pass when we purchase the goods. When we return back the goods, the entry will be purchase return account data. X account data to purchase return account. X account data to purchase return account. So we are debiting X account. Earlier when we purchased the goods, X account was credited. Now we are returning back the goods, X account is debited. When X account is debited, we make a document called debit note number. In this debit note document, we record the item which we have returned back, the details of that item, the amount, the party, all these details will write in debit note document. And this debit note document will be sent to the supplier from whom we have purchased. So debit note is required whenever there is purchase return. Now credit note, it is opposite. Credit note will be applied when we make the sales return. Earlier we have sold the goods to Mr. X. So entry will be X account data to sales. We have debited X when we sell the goods. Now X has returned back the goods to us. So X account will be credited. X account will be credited. Sales return account data are to X account. This is the entry when there is sales return from X. So X account is credited. That's why we make credit note number. So it's a document which is prepared at the time of sales return when goods are returned by the customer, and this document will give you the details regarding the sales return. That's it. So this is the complete theory regarding subsidiary books. In this video I have explained you the meaning of the term subsidiary books. Remember, subsidiary book is a part of the journal. The main journal is subdivided into a number of parts. Each such part is a subdivision of journal. It is called subsidiary book. And each subsidiary book deals with a particular type of transaction. That's it. These are called, and these are the types of subsidiary books. So next video I'll start the problems on subsidiary books. So the problems depend on theory. You should not skip theory. You should completely watch, completely listen the theory, then only you can be able to understand the problems. If you like my lecture, give a like to the video. Subscribe it if you have not yet subscribed. Share it in your group, in your friend circle, so that more students can get the benefit from this type of lectures. And give your special comments. I'll read each and every comment. That will give you more and more enthusiasm to give you better and quality videos to you. Okay, we'll continue this in the next video on problems of subsidiary books.